Crazy idea, hear me out. Who really controls the stock market? I don't know. I have about 100,000 elite retail investors following me on Instagram. So what if every morning I put up an Instagram story with a poll asking where people think the price of a particular stock will be headed that day? This way I can get the market sentiment for the day on a particular stock and trade based upon that.
That's f***ing genius. Now, am I a YouTube sensation with hundreds of thousands of Instagram followers? Absolutely not. What I do have, though, is about 30,000 Twitter followers. And let's be honest, if you're following me on Twitter, you're probably interested in markets. So maybe my 30,000 Twitter followers might just be a little bit more informed than Biaheza's 100,000 Instagram followers. If that's the case, could this actually be an informed trade? Could we use the sentiment of other smart market participants to tell us the direction of where we think the market's going to go today, where bonds are going to go, where oil's going to go? So here's what we're going to do. Every single day before market open, I'm going to throw out a couple of polls to my Twitter followers. I'll let them expire after a couple hours, and depending upon how the polls come out, positive or negative for whatever asset class I'm looking at, I'll go long or short that asset class for the rest of the day. At the end of the week, we'll see how we do.
Let me give you a brief history of sentiment trading. So in the 1980s, Peter Lynch was at a height of his fame at Fidelity, and he came up with the mantra, buy what you know. Now, retail traders absolutely ate up this concept because then they felt they could spot trends when they're out with their families having dinner, shopping at the mall, or even watching movies. This probably gave rise to the day trading boom as well, but you never know. In 2010, private investor Chris Camillo came out with a book called Laughing at Wall Street. In the book, he talks about having an informational arbitrage.
And I actually turned 20,000 to 2 million from 2007 to 2010 in the middle of the worst financial turmoil we've had in the country in decades. And the way that I did it was just learning how to retrain my mind to identify game-changing things in real life that were having game-changing impacts on publicly traded companies. And the trick here is to understand when you see something in your life that Wall Street hasn't picked up on yet. And that's when you have an opportunity to make an information arbitrage investment. Now, the moment that Wall Street starts talking about that thing that you picked up on days, weeks, or months earlier is when you exit the investment. And that really is what my methodology is all about, just living your life and learning how to see things that could correlate to investment opportunities on Wall Street.
He felt, as a private investor living in middle America, he could spot trends much quicker than anybody on Wall Street could. He felt they were at a socioeconomic disadvantage to spot trends in things like Crocs.
For example, a coworker of mine last year came to me and she said, Chris, I know you're an investor. I just read this book called The Hunger Games, and all of my friends have read this book. And I'm telling you, if they ever make it into a movie, it is going to be bigger than Harry Potter. I thought she was nuts. Bigger than Harry Potter? I've never even heard of this book. And I did a little bit of research, and I found out that Lionsgate, a company that had never had a blockbuster film, had actually slated to turn this book into a feature film. Now, Lionsgate, in the next 6 months, doubled as a stock, right?
In 2011, an academic paper came out talking about the sentiment in tweets, especially on smaller accounts on Twitter. Now, most of us, like Wes Gray at Alpha Architects, thought this was a fairly spurious correlation, but an entrepreneur was able to go on and raise $45 million fund under Derwent Capital. Now, the fund shuttered after 1 month, likely due to lack of interest, but more importantly, with the regulatory costs of running a fund, it was no longer prudent. The entrepreneur went on to try to create several other companies that worked on this concept of sentiment coming out of Twitter, but none of which really seemed to take off. The question is, from 2010 to 2021, were alternate data sets used, like Twitter sentiment, for example? Have quantitative hedge funds bought up all these alternative data sets, like credit card information, etc., so they can use them for their proprietary dating.
I'm just so lonely.
So they can use them for their proprietary trading models. I guess we'll never know. What's been more interesting lately is the rise of the Wall Street bets crowds. These private forums have liking and upvotes, which then create a gamma-like effect to that news feed. So now sentiment has gone from maybe a quarterly or annual trend that you could try to track to maybe a trend that only lasts a few days to a few hours due to the upvotes on Wall Street bets and people YOLOing call options. The question is always, you can track sentiment, but can you create a trading strategy out of it?
All right, everyone, it is Tuesday, about 9 a.m. We've just posted the first 3 polls. We'll give it about an hour and see how the results come in. Polls are closed. Let's see what the results are. We're going positive on the S&P 500. We're going positive on bonds with rates down, and we'll be going negative on oil. Okay, we hit a little bit of a snag. Because I'm a fund manager, all of my trades have to go through my compliance department, and I forgot about the fact that when I was putting in the pre-approval, some of these securities might actually be on our restricted list.
12 seconds later.
Okay, we got everything worked out. Orders are in. Now we just got to see how we do for the rest of the day. Day 1 recap. Market down pretty big, rates down, oil down huge. Based on this morning's poll, we were long the market, long bonds, short oil. Hey, 2 out of 3 ain't bad. I have to say, opening and closing these positions on Schwab isn't nearly as much fun as it seems to be on Robinhood. Schwab, I could use a little confetti here.
Yay!
And yes, I did change my shirt today. Thanks for noticing.
You know, when I was just doing my brief history of sentiment trading, I purposely left out the Buzz ETF that is kind of joint ventured with Dave Portnoy, because I wanted to kind of get your take on it and if you had any thoughts or feelings on the Buzz ETF.
They showed me their algorithm. I said, this is brilliant. Of course it'll work. If you don't adapt, you die. Twitter, social media, all of it is dictating stock prices.
Well, I really like the idea you mentioned about this social gamma, right? At a certain point, when you're partnering with someone like a Dave Portnoy who has a big megaphone and can affect social media, how does that ultimately sort of become its own self-reinforcing trade where he talks about stocks, Buzz is going to end up picking up those stocks, and he potentially has influence in people buying those stocks? It seems to me like there might be a little bit of a regulatory wrinkle in there worth considering.
I think it's interesting. I think even recently, Penn actually bubbled up onto the Buzz radar for including in the Buzz ETF. So you have a nice reciprocity and a feedback loop there.
From a quant's perspective, what's really interesting to me is this idea of sentiment trading isn't anything new. And you talked a little bit about the idea of social arbitrage as one type of sentiment trading, but sentiment trading spans this huge set of signals. And so we're having a little bit of fun this week using Twitter as a polling device to sort of tap into the wisdom or maybe the madness of crowds as a sentiment indicator. But the reality is, right, you could measure sentiment with that sort of word on the streets, social arbitrage. You could do it with positioning data and get the sentiment around how different funds are actually positioned in their strategies. You could look at management sentiment of companies, looking at their transcripts. You could look at analyst sentiment.
I like the stock.
Is a company being upgraded or downgraded? So there's all these different types of sentiment indicators. And what's at least fascinating to me is the horizon over which they operate is very different. We would say that often a broad market sentiment indicator might be contrarian. When there's extreme bullishness or bearishness, we might want to take the opposite position. But improving analyst sentiment on the earnings of a company might actually be a good thing in the short term. So it's really interesting to me that there's this we're having fun with this little test, but sentiment as a classification of signal is really, really broad.
Day 2.
For day 2, we decided to change the investment universe, and the polls said to go short gold, long small caps, and long high yield.
So we're a few days into, using your Twitter feed to see if we should go long or short on several markets. Is there any feedback you have so far for me? Like, what do you think you've learned, or has anything surprised you in any way? Or
hold on, I have an ice cube in my mouth. I didn't mean to do that. One of the things that's been really surprising to me, maybe actually it hasn't been that surprising. The polls have just been really close to 50-50. I mean, sometimes I'm going positive on something when it's 52 positive, 48 negative, and the statistician is like, my skin is crawling, right? Because there's no way it's a statistically significant positive poll, especially given the types of numbers we're seeing in the votes. And we're seeing hundreds of people vote. But again, a slight edge doesn't necessarily indicate anything. Arguably, if it's a slight enough edge, we might want to say just unchanged and not take a position. And a lot of people who follow me probably don't have an opinion day to day, right? If I said what's going to do better over the next 6 to 9 months, value or growth, they might have a strong opinion, but I'm not a day trader. So people who follow me probably aren't a day trader. So in reality, it might not be a great audience for testing this other than just having fun.
Well, I think at the end of the day, they're having fun and flipping a coin. And that's actually what it boils down to at the end of the day, is people are guessing long or short without having any sort of real data to back it up.
There's nothing quite like trading levered instruments on a coin flip. Why are we doing this in my PA? Why not yours?
Exactly. It's your idea.
Day 3.
Okay, trying to stay positive despite yesterday's absolute beating. Today we're polling on the NASDAQ, emerging markets, and silver.
The money in your account, it didn't do too well, it's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
My favorite part about Chris's thesis is actually this kind of socioeconomic angle, that anybody on Wall Street has a certain socioeconomic class, so they're going to have a certain peer group, and even when they're looking at companies, they're going to do it in a certain way. And so, for example, he talks about Jeffree Star. Now, what is the likelihood of any sort of Wall Streeter knowing about Jeffree Star on YouTube? Very low. But it's fascinating that if you're into the YouTube ecosystem or into that sphere, you can learn about, Jeffree Star can really move products at massive scale, but it's not something that maybe a Wall Streeter would know about. So it's interesting that even in this day and age, there's a lot of still this information arbitrage there, just based on what people in institutional settings are willing or able to do. It's like, as we've seen a million times, whether it's podcasting initially or Clubhouse or Bitcoin, they already have this institutional mindset about these things are stupid, they're not for them. So they don't have the curiosity to look into them.
Day 4.
Maybe everyone's just not taking this seriously enough. Maybe it's really a question of incentives. So this time, we're doing it for charity. I'm putting $2,500 on the line on whatever direction the crowd votes the S&P 500 is going to move today. Polls are closed, results are in. We will be going long the S&P 500. And now we wait. Midday update, not gonna lie. First half of the day, not looking great.
Yeah, they had us the first half, I'm not gonna lie. They had us. We weren't defeated, but they had us. But it took guts, it took an attitude. That's all it takes. That's all it takes to be successful, is an attitude.
But we're now up 50%. I'm making an executive decision. We're selling half the position.
Yay.
Do you think the importance of sentiment ebbs and flows in the market? Like, is sentiment more important today than it was 5 years ago?
That's a great question. And to me, I would say yes.
That's why I asked it.
And I'd say yes, because I think it's just the internet age, right? It's the free flow of information, and we're getting so inundated with information that you're going to have these aggregate effects of certain amount of information is just going to winner take all effects, and that rises to the top. So at the end of the day, because we're so inundated with information, it's just going to be a sentiment trade at the end of the day.
Okay, drum roll please. The final result was we made $2,830. With the original $2,500, that is a grand total of $5,330 going to charity.
And it's gone.
I have no idea.
Well, that doesn't make good video content.